Here's what's moving today. Across AI, the markets, and geopolitics. We give you the headline first, then the full breakdown on each. From Rewrite, here are today's highlights. Nvidia announced a $20 billion bond issuance to fund artificial intelligence infrastructure investments. WitchHunt, a large-scale AI hackathon designed to empower girl innovators and close the gender gap in AI innovation, has been organized by HopeWorks F. Block is eliminating 4,000 jobs, representing a significant workforce reduction. Here's the full picture. Nvidia announced a $20 billion bond issuance to fund artificial intelligence infrastructure investments. The funds will support the company's AI infrastructure build-out, with bond maturities extending to 2056. The company also stated that artificial intelligence will create manufacturing jobs rather than eliminate them, and that society will need to establish new social norms as AI becomes more prevalent. Here's what this means. Nvidia is securing massive capital while simultaneously positioning itself as a responsible actor in the AI transition. This bond move signals confidence in long-term AI demand, even as regulatory and competitive pressures mount. Jensen Huang is essentially betting that infrastructure spending will outpace geopolitical friction. The transmission flows from chip announcements through capital expenditure and supply chain positioning into equity repricing across the entire AI stack. Vera CPU, Nvidia's new processor for Chinese markets, emerges as a winner, benefiting Chinese cloud customers within export control boundaries. European tech companies and Nvidia itself face headwinds from US export controls. The base scenario holds. Controls persist. Nvidia adapts its product mix. Vera grows incrementally. Intel and AMD compete regionally. The tail risk is severe. Escalating US-China decoupling could collapse Vera's supply chain and freeze Chinese cloud infrastructure entirely. From past through present, we see US export controls contradicting Chinese regulations, while Nvidia supplies semiconductors dependent on fragile supply chains. Today, Jensen Huang speaks to society about AI's role even as Nvidia co-occurs with NTT and Canadian partners. The forward arc depends on whether Nvidia can sustain this dual market strategy or fractures under geopolitical pressure. WitchHunt, a large-scale AI hackathon designed to empower girl innovators and close the gender gap in AI innovation, has been organized by HopeWorks Foundation in partnership with AI for India and the Karnataka Digital Economy Mission. The hackathon represents a direct intervention into the underrepresentation of women in artificial intelligence fields. This is the reported initiative as of June 13th, 2026. Here's what matters. The gender gap in AI innovation remains one of the most consequential structural inequities in technology. By creating dedicated space and resources for girl innovators to build, compete, and network within AI, WitchHunt addresses both pipeline and visibility problems simultaneously. HopeWorks Foundation's sustained capital commitment signals institutional confidence in this model's viability. The transmission chain runs from foundation capital through the hackathon platform directly to girl innovators. In the base scenario, WitchHunt sustains steady growth with consistent HopeWorks funding, allowing incremental skill building and network effects to compound. The tail risk emerges from regulatory pressure on nonprofit governance or data privacy failures that could collapse the entire ecosystem. The arc moves from past supply through present delivery toward a future where either this model scales as proof of concept or regulatory friction halts momentum entirely. Watch whether HopeWorks expands funding commitments beyond this initial cycle. Block is eliminating 4,000 jobs, representing a significant workforce reduction. The company's stated rationale centers on operational efficiency and margin sustainability. Shareholders are positioned to benefit if the company can improve profit per employee while maintaining margins. Here's what matters. This is a classic fintech playbook. Cut costs aggressively, signal discipline to markets, and hope operational leverage translates to shareholder returns. The real question is whether 4,000 departures create execution risk that outweighs the near-term stock relief. Payment processing and credit systems don't tolerate much operational friction. The transmission chain runs from Block's cost structure directly to shareholder portfolios in the base case, with modest near-term stock relief offsetting operational uncertainty. Winners are clearly shareholders betting on margin recovery. The tail scenario is where this gets serious. Regulatory scrutiny on fintech layoffs, combined with any credit or payment processing failures, could trigger systemic contagion across the broader payments ecosystem. The past and present show the same event. The cuts announced and executed on the same date. What matters now is whether Block's skeleton crew can execute flawlessly through the next operational cycle. Want to go deeper? The neural web shows you who's connected to whom. The signal board ranks what's actually moving and why. And the daily briefing is your 5-minute read. It's all live. Start at rewrite.io.